Hey, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these and make your own financial decisions. Today is Wednesday, October 19th, 2022, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we are going to take a look at an ongoing trade that I have going on Amazon. It actually expires this Friday. It was an option play, and I'll give you an update on where that's at. I ended up managing that trade yesterday, so we're going to talk you through some of that. Also, we're going to then visit price levels associated with Amazon. I think there's a lot of fundamentals there that I myself am still learning, and we're going to have Viper kind of talk through some of that in this episode. But before we hop to that content, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, a few of the other Blockhead traders. You can also find all of my trades at thetagang.com/sprocket888, the good, the bad, and the ugly. Lastly, you can pick up this episode wherever you get your favorite podcasts. And if you can't find it there, let us know and we will get our podcast there. But let's hop to this week's content. And Viper, it has been quite a week in the markets. I feel like I say that every single week, that it's been a week. Volatility is just super high. Everybody is on eggshells with inflation, potential recession. Earnings week really kicked off at the end of last week with banks and financial institutions, which all reported better than expected earnings. So far this week, the earnings that have come out in a few of the companies have also exceeded guidance and expectations. So the market has started really ripping this week, cooled off a little bit today. But I mean, last week we were headed to zero. This week we seem to be stabilizing. It's just a whipsaw all over the place. And it's a lot exciting to see some of the prices. I guess it can be really stressful if you happen to be in some of these names that are just picking up massive percent moves every day. I think last week I had Roblox shares and they were losing 7-10% a day. And then this past Monday, they decided to rip like 22% up. And so it is just whipsaw action all over the place. And I wanted to bring up a trade that I had made on this episode. There's a whole series of shows where we kind of been touching on it, but it's on Amazon. So let me bring this up here. Viper, this Amazon play that I put on was a short naked put. I did this at the very end of August. It was a 30 delta put at the time. It was for October expiration. That expiration is this Friday. I collected $2.60. Well, Amazon hasn't done too well. I think it's gotten as low since I entered this trade. I think it dipped down to maybe $107 or $107, $110, something like that. It dipped down pretty far. And then it started ripping earlier this week, and I actually got in the money on yesterday. But there's an interesting phenomenon that happened that allowed me to actually roll the trade yesterday. I kind of debated on whether or not I wanted to exit for my profit. It was a little below my profit target, hadn't quite fully met there. It was green. Or I could extend the trade, extend the time frame by rolling the option. And I'll show you on the chart why I decided to roll here in a second. But I decided to roll it out another month. And what that means mechanically is I bought back the option I sold. Now, there was only 3 days left before expiration, so it didn't really have much premium left in it. And then I sold the exact same strike in November expiration, so a lot more time. So I collected more premium there for that extra time. And so I was able to then roll that option, collecting an additional $4.54. So you can see that the total that I now have on this trade is $7.14 is what I've collected. Now, the reason I decided to do that was because volatility has done nothing but gone up essentially since I sold the first one, which means the premiums have gotten thicker and thicker. But I hung on to it, and so all of the time premium of the one I sold was pretty much gone because it expires this Friday. So for a small amount, I could buy that back. But then because the premiums are so elevated, I could sell the same strike out 30 days from now and get a big return. So it was not a 30 delta. It was actually about a 40 delta when I executed on that trade. And because of that increased volatility, because I'm now closer to the money, it did require more buying power. So I had to put up $2,600 in buying power for this trade. But remember, I'm now collected $7.14. And so now my potential upside is almost 28% on the trade. So just let you visualize this with a chart. So let's hop over here to the Amazon chart. And what I want to call out here is at the end of October, this is where I entered the trade. And I want you to pay attention to this thin blue line down here. So this is the volatility. And so when I entered the trade, things started just going like I thought, hey, we're kind of really elevated here, which we really were. We got this beautiful volatility contraction. And I was like, oh, this is going wonderful. And then the price really started to slide. So hopping up here to the top of the chart, you can see the big price slide. And the whole time this price is sliding on the top, you can look at the bottom and volatility is just growing and growing and growing. We kind of made it back up to these averages, but then we slid some more. And look at that. The volatility grew and grew and grew. And so to the point, the end of last week, this volatility was almost as high as it had been in the entire last trading year. And so this window down here is about a year's long time frame. And so volatility was at like the 95th percentile. And when the week opened this week and we started getting a rally on Amazon, I thought, you know what, with this much volatility, this much potential for that contraction of volatility, that's a cyclical thing. It's an oscillator. It's going to pull down. When it gets low, it pulls up. I said, you know what, this is just too good to pass up. Let me go ahead and extend this trade and sell the premium. And so yesterday, when it was up around $118, really at this kind of peak, I bought back my option and I sold the one that was 30 days out to get that additional premium. And, again, if we go back to the chart the thing that I have up, I'm okay with assignment. I'm okay to own Amazon. And the key thing I want to call out is now that I collected this more premium, now my worst case scenario is I get assigned Amazon and I have to pay $107.86 a share versus my previous trade was I would take assignment at $112. So I'm improving my situation should the worst case situation play out. So Viper, I just wanted to touch on this aspect of trading. And I was really kind of curious where price action might fit into this. And the reason I bring this up is price action is something that I feel is a good secondary tool to use when you're option selling because it gives you a good expectation of, hey, here's a decent entry point to take that option trade because the probability is in your favor. And as long as you're taking the option trade where probability is again in your favor, you're like doubling or improving that probability overall, because not only do you have the mathematical probability from the option trade, you have the price action potentially to back that thesis up. And it's one thing that I've really been struggling with to really understand, how do I read the charts of a particular underlying and make actionable decisions when I'm looking at option selling, which is typically in the next 30 to 45 days is the trade horizon that I'm typically dealing with. So what should I look at when it comes to those charts?
Yeah, and I would, so in this journey of being more precise and deterministic in my price action, I would almost slightly alter your words there to say that to me, price action is not just secondary, but it's the primary tool. I mean, I totally understand. I totally get where it comes from in your perspective as a secondary tool, because you can and you have absolutely make a repeatable strategy using the deltas, using the Greeks, using the mathematical probabilities. So I get how it can be viewed as secondary, but also, like you said, what's better than being even more confident in what you're seeing and getting that convergence and that confluence of the Greeks and the price action to just, I mean, that's the ball game, is bump up those probabilities every way you can.
Yeah, let me just mention on that primary secondary thing. I guess when I say primary versus secondary is what's your first screening criteria? And so for me, my trade vehicle that I like is option selling, right? And there's certain criteria that have to be met for option selling as far as liquidity, volatility, things like that. And so when I say secondary, I mean the secondary factor when I'm looking. So I'm going to screen for those option plays that have good premium, good things like that. And now I've got this smaller subset. Now it's where's the entry? If they do it the other way around, you could find beautiful entries from the price action, but their option chains or options potential could just be garbage. And so that's, potato. That's why I have primary is my option screening, because that's what I know, that's what I love. But then it's where do I find the right entry point once you find those good option candidates?
Yeah, and that definitely makes sense, and is good to call out because as a screening criteria, the Greeks can lead the way on that, and all the other ways that you talk about how you screen that. Fun fact about your play is if anybody of our avid viewers might recall, in the hypothetical scenario, I was also long on the position, except I just said, you know what, I'm just going to straight up buy this and just hold these shares and let's see what happens. So fast forward to right now, and as I recall, that straight up buy, it was not the ideal entry, but I believe it was around 120, 121 when I hypothetically bought in 100 shares, and so I'm just sitting there staring at red right now. Had I done that, and you are staring at still 0 shares held, which is fine, and in a worst case scenario, $107 now is your buy-in. So that this continuing, this rolling, this forward, everything you just talked about, this is playing out in this particular case. Just that stark difference of the same end goal and the better utilization of capital. So, but let's take a look at some charts. Let's get into some charting here. And what I want to do is try really hard to stay focused on just a couple key things that I think are most important when trying to lay out a chart. And what I mean by that is we have a lot of charting episodes on this channel. I've said it before on previous episodes. If you go back to the first chart episode we've ever done, I'm pretty sure I would be heavily embarrassed at what I did or what I talked about and how I laid it out. And nothing was technically wrong in what I said. However, the purpose of this journey, the purpose of what's happening here, we're learning in real time, and we're constantly, every episode, delivering the best of what we understand at that moment in time. And another shout out to our Discord. Everything that I've evolved or matured in my process from that episode till now, a direct 100% result of interactions in that Discord. But that is to say, let's have another go at it. And this will not be the last go at it. There will be many more to go, because the one thing I've learned from all of this is repetitive. Do it again, say it again. I mean, everything I've learned because I've watched the same video or the same tactic at least 5 or 10 times, and just constantly thought about it and let it sit in. So let's jump over to my chart here. And as we can see, there is no chart, because what I wanted to get across here is what we're dealing with when looking at a chart is you're dealing with trends. You're either in an uptrend, you're transitioning or testing your invalidation, or you're in a downtrend or reverse. So I want to drive home those points: uptrend, downtrend, and the idea of invalidation. So obviously we all know that, what an uptrend generally looks like. You have all these ups and downs, and but it's going higher and higher. And I mean, what about this? Or, as it unfolds, when do you call an uptrend done and a downtrend started? And the one analogy I want to draw here is climbing a ladder. And I don't want to take that analogy too far because it kind of falls apart. Nobody climbs a ladder down. Use gravity to help you there. But climbing up, I want you to picture, as I go through some of these mechanics, that what you physically do as you climb a ladder, and how you reach up and grab the rung and pull yourself up versus if you grabbed the rung and slipped. Those are two mechanics I'll probably try to refer to here. In climbing that ladder is the actual mechanics of what you're doing. So hopefully that makes sense in just a second. But we're going to take a look here at Amazon and kind of dig into this and see what we can see. So when I look at a chart, immediately looking at this, I'm going to go to a couple key areas on the chart. I want to know where were the all-time highs. And so right here, and right here. So the first thing I look at on a chart is give me the all-time highs. Let's just acknowledge where they're at, and then we're going to kind of build off of there. And because you're either swinging to all-time high or you're headed back to test a critical level. So the next thing that I want to look at is what range do we care about? I mean, there's a lot happening here when you look at this chart. I mean, okay, so we went up, we're coming down. What is happening here? So we want to identify key ranges. So now let me actually throw just a little marker on those all-time highs so we can quickly reference them together here. I want to know what range we care about. So as time was moving on, when we hit this all-time high, let's say this second to most recent all-time high, as we were climbing up here, the range we cared about was the previous all-time high to wherever we were in time until we set that all-time high. Once we set it and started moving sideways here, this was the range we cared about, was from the previous all-time high to the current all-time high. And use that same idea of what range do we care about. So for a brief period of time, there was a tiny little range here between these two all-time highs that this was the range we cared about. The second thing I want to know is I'm going to say this multiple times, where is the move that started the all-time high? And that is the next thing that I care about when I'm digging into one of these charts here. The move that started the all-time high. Now, this is where these things, you just need to repeat them over and over in your head. And I still do to this day. But here we have this all-time high. So this was the thing. And then we eventually moved to here. So how did we get up to here? Well, we had this all-time high. You can just kind of roughly follow the price action. We came up here. We did not. So this, I don't care about this peak. The only thing I care about this peak is this failed. This failed to be a new all-time high. So we come forward over here, and then now this is interesting over here. We technically set temporarily a new all-time high here. So I'm very curious about what's happening here. So I zoom in here, and I take a look. And so when I talk about the move that set the all-time high, we had this little blip. So I'm really not too worried about this. What I'm worried about is how we got to this all-time high up here. So you could say that the move that started that, because obviously these candles are all up. So the move that started it was right here. We had, and one thing I've learned recently was, you're tempted to put the marker on the bottom here, which isn't entirely wrong. There's plenty of reason to do that. However, I like to go one candle before, because that is the thing that started a down, it started us up here. We went down, then up. So that's what I care about, is that $86 level there. And so now as I'm charting this, that's the move that started the all-time high. So that's a range, that's a number that I care about a lot. The other thing I care about is what was the all-time high, because remember that box, as I dragged it around, it's always, you don't want to lose what you previously gained. So if you previously set an all-time high, like we did back here at 101, you don't want to lose that. When we set this one up here, you don't want to lose that, but we did, and we started going down. So, so going forward, I have these two levels here, which I think are pretty good levels to have charted here, and we can already start to see that this is playing directly into the price action that we're seeing here. And because of where price is today, that's also why I wanted to put this level on this previous all-time high, because we're in this range. We care about this range. We lost this all-time high. We lost this all-time high. We started a downtrend. And so the thing that I care about is right now, all eyes are on this all-time high, and will we lose it, or will we gain support here? So what does that look like? The thing to spot is, we were in an uptrend. What does it look like to actually invalidate the uptrend and start a downtrend? And that's where we kind of layer on some nuance here, but we come up to the all-time high, the real all-time high here. We'll go ahead and throw a level down here. I'm just roughly going to put that on there. We talk about things like local lows, local highs, all-time highs. And all that means is all-time highs, pretty self-explanatory. Local lows are when you're in an uptrend, obviously you get some of these reversions, and that's to be expected. So those are local lows. And so what happens is once you've gained an all-time high, then once you've failed to make a new all-time high, which we did right here, you start to move down again. So, okay, that's fine. We did that before. We did it here, and we still came back up, and we could have had a chance to break through. So, but this is the local low. We set the all-time high. We came back down wherever we stopped. Wherever we came back down, that's a new local low when we bounce off of it. And wherever we bounce off of that, we don't want to lose that. So we'll throw that down there. So we come down, we bounce, we go back up. Oops, we didn't make it up. We're coming back down. So what's our thesis? Our thesis says we don't want to lose the local low. Once we lose a local low, we want to see it gain back. Otherwise, we're probably in a trend reversal. So you can see here, we've charted this. We're coming down. We've lost, and you lose it, but you're not confirmed lost. This is climbing that ladder, obviously in reverse, but hang in there. Climbing that ladder. Our hands, we've raised. We're going above the rung, but we haven't decided whether we've got our grip or whether we slipped. The way you do that, when you determine whether or not you've got your grip or not, is not actually this move. And this is where a ton of emotions come into play. Is this thing starts running and you're like, dang it, I missed it. But I mean, look what happens. You think you missed it, and then all of a sudden we're right back there where we were. You didn't miss anything. You were waiting for confirmation, which is another big word that throws around a lot. Confirmation of the move. So this move here, as much as it looks like this would have been such a sweet move to short, you kind of don't want to touch this move at all. You want to wait for the confirmation, because we've already identified this is a key level. So we slipped, we found it, we came back. And so now this whole series of events right here is what's determining whether or not we've actually got our grip on the trend direction or not. And so obviously we can see here, we came back up. We did the right thing to regain the level in that if you're thinking uptrend, confirm the uptrend, or not confirm, just protect the uptrend. We did the right thing in regaining the level. However, right here, our hand slipped and we dropped it. So we came back down. Now the series of events, as far as if we're taking a short or something like that, there is plenty of right here on this move. There's plenty to support shorting at this moment in time. Somewhere in these candles here, that's your chance to short. And the reason is we've lost, we've tested, we slipped, and now this green guy right here, followed by the red candle, is now below this local high. So we have now failed to make the local high, and we've slipped the level, and we're bouncing resistance off that level. So this is the time to play a short move. It's up to you how long you want to ride that. So if we just keep playing this out, you take the short somewhere in these couple candles here. It's really hard in hindsight to know when you would have done it. However, Now we're looking for invalidation. So we took a short. So our thesis is downtrend. So where do we get invalidated on that thesis? Well, we come down. We do get a bounce back up. However, we level off here. This is now a new local high, or a lower high from what was here, And so now this is just confirmation of our current micro downtrend. And so we're good to keep holding this short. So we have this lower low, lower low. What's our invalidation for this play? Well, we're thinking downtrend. Not only are we thinking downtrend, but we're playing the loss of this level. So our invalidation is to regain this level. And by regain, again, climbing that ladder, you want to see your hand go above the level. But again, emotions in this time period here, emotions are going to play havoc on you because it's the exact reverse of what happened over here. We come up, our hand is going above the rung of the ladder, and we're potentially thinking this is it. I screwed up. Now I'm, in a loss up here because I entered the short here. But look what happens. This is all one consistent move up. So none of this counts as, testing whether or not we've got our grip on the rung. So we move up, and then it comes down, and we slip, and we do it again. And so none of this should have spooked us into invalidation because none of this action confirmed that we actually got our grip on that rung to pull ourselves up. Our hand came above the rung. We tried to pull down, and we slipped. And not only did we slip, we couldn't even bring our hand back up above the rung, and we were off. And now this loss here drops even harder and drops below these local lows back here. And so this move here and then the subsequent action confirms our downtrend and our reversal of the macro level uptrend. If we zoom out, that's kind of where we're at on the chart. That move right there confirmed, like all of this that we just looked at in this area was confirming whether or not we were actually transitioning. It was this last little moment here that we actually confirmed that we are actually going down. Actually, it was kind of losing this local low that confirmed we were in a downtrend. Now we're at just a point where we're just getting confirmation of the downtrend. We're still holding the downtrend. We got, we went way down. We bounced up, failed to set a higher high. And then obviously if we go back to a more macro level, we understand why we stopped where we stopped, because this is a significant and serious level. This was an all-time high. So now all eyes are on holding this level, and our thesis should currently still be downtrend, and our invalidation of what this looks like to lose this level would be exactly what we just talked about up here. You would see a hand go over the rung. Again, remember, hang with me. We're in reverse now. Go over the rung. So this isn't a panic moment yet. We want to see if we can actually get our grip to continue the downtrend, or do we slip our grip, come down, get support in this case, and then go back up. So at this point, we haven't really seen that yet. You can see we came down, we bounced, and we bounced again. And on a micro scale, we bounced again and set a higher high than this local high here. And currently we've put in a higher low on this swing. I wouldn't say this swing is over yet. This is exactly where we're at in this point in time. However, if this does turn up to be a higher low, then and we get a confirmation of an uptrend, which would be clearing a local high here. Once we clear that, then our expectation should be to clear above this previous high here. We would want to see that. And if we see that, now we're thinking we're in a longer uptrend potential reversal, certainly on a micro scale, possibly on the macro scale.
Yeah, Viper. So this is a good view right here because I like my trades in the 30 to 45 day window. This is pretty much a nice viewpoint of this Amazon trade that I'm in. And so if I understand the important levels here. It's the one that you have marked there at the 101, because that is the level that made the all-time high, right? So that's kind of the swing that started it all. So that's an important level. And then I think the other level that we care about, because we're in a downtrend, is where is the level where the downtrend was confirmed? And I think that's the 156-ish level that you have marked there. So if I'm reading this correctly, from my trading perspective, my plays that I would want to orient myself around or be concerned about is when it gets closer to either of those two levels, the 101 or that 158. And if I understand this correctly, as we approach the 101, if that level rejects, there's good confidence there that, or there's a high probability there that we could be in the middle of starting a reversal the other way. Now, we don't have any idea that reversal is actually happening, but the first opportunity for a rejection or a resistance level would be that 101. And I think we've hit it once. So that kind of can count as times that it has held up. And then as we approached it just a few days ago, we didn't go down and test it. So it's kind of like a higher low. Yeah. And what I'm looking for here is, if the concern for my trade, because I sold a 115 put, my concern, I think, would be if we dipped below that 101 level, then that would make me nervous. But if we came back up to test 101 and 101 rejected, then I think it's lookout below, and that should be my panic moment on the downside. And I think if I'm reading the upside here, I could theoretically believe we should be swinging up with this higher low to 158, where it could reject or it could gain and hold, but it's a decision point. So where I guess I'm getting at this is, my play here is I sold premium, and I want this thing to basically go nowhere or up in time. And what I'm seeing here is probably time to run up, because it's not going to jump to 158 tomorrow. At least I don't think so. And if we drop down to 101, we should at least have some moments of pause. All this is eating time. Am I reading this correctly?
Yeah, I think so. And there's a couple just tiny colors that I want to add to that, which is absolutely, we know how we arrived at these three levels that we see on here. And so these are the three levels we care about in this current moment. Just like you showed, 107 is your worst case scenario buy-in. And what you do not want to see, for the downside risk, is, like you said, you don't want to see going down here, slipping it, coming back up, and one of two things: either coming back up above and slipping below again, and then coming up and rejecting off of it. That's one possibility. Or the other thing is, you don't want to see slip and then straight up never regain and reject off of that. That is to say, slipping it is concern. Like you said, there is still the very real possibility that we come up, regain, test, get our support, and go back up. Looking at what we see here, it's doing the things you would want to see it do given your position. And what I mean by that is, you don't want to see it, this 101, this is an important level because this is a previous all-time high. The range we care about, just like you said, just like you see, 158 to 101. That's a range that we're scoping in this particular play. You don't want to see it just continue to bobble around on this 101. We've already hit it basically twice here. You really don't want to see it come back a third time. However, it's not terrible if it does, and it's not terrible purely because it's doing the right things and putting new local highs, new higher highs as it climbs that ladder to try to climb back up. However, I think you were perfectly right to say It's not as concerning in this current moment. However, there's a lot of nuance to this current swing. However, what we know right now, it did come down, put in this high here. It hasn't technically, it hasn't technically snapped out of this clear micro downtrend we see. That will happen first step. The first rung on that ladder is clearing this line. So you want to see that in the coming days. You want to see that confirmation that we are potentially still climbing up. So maybe at a bigger scale, yes, everything you said about 101, 158, that applies. Those little feel-good moments, either hold this local bottom here and start climbing that with this 121. That's going to start to feel good that maybe we actually are snap out of this micro down and we start going back up. Once we clear that, you just want to keep following the ladder and clear this high, set in a new one. But I think you're ultimately on the right track.
So, fun fact, see that little purple E? That's the accelerant.
It is accelerant.
That's earnings.
Yep,
that's where we get level fast forwards.
Yep, I mean, look right back here. We had an earnings, and this is good. This is because we talk about this a lot in Discord. Earnings tend to be an accelerant of the current trend. A lot of people think, oh, it was bad. It's just going to tank the price. I mean, look, this is color coded. This red E back here, earnings were a miss. It was a surprise. Holy smokes. Am I reading that right? It was a surprise 266% off from what was expected. If I read that right, that's a pretty massive surprise. What did the price do? It gapped up. Because it was in this uptrend. This was accelerant. It was poured on. We sped through the move. We did what it was going to do. And so now we're coming back up here. So based on that, you might want to see this clear 120 before we get to the accelerant. Otherwise, it might just be an acceleration down.
So Viper, one thing, now that we kind of cleared some of that stuff up, at least a little bit, how it's practically applicable to my trading style. I love selling options, and the way that I think I would read this is the sweet spot for put selling is when your volatility is high and you're close to a decision point. And what I mean by that is I believe what I would be looking at doing is selling a put as we get closer to that 101 level. Now, I don't sell the put at 101. I typically, when I go to sell a put on a brand new play, I'm selling it, 30 delta out. So 30 delta as that price is close to, let's say 105. At 30 delta is probably going to be around $92 or something like that. So putting that put trade on when you're down there, it's before you hit that decision point, right? So you're cashing in on the increased volatility. You're giving yourself a little bit of cushion because that strike is going to be down there, $90, $93. And then you get a tack on the premium you collected as your safety net to that. So you could be pushing down your break even maybe to the $87 to $85 range, which gives you cushion should that level fail. And then on the flip side, I don't advise ever selling naked calls, but if you're going to place a bearish option trade, a good place to do that might be as you approach that 158 level. And again, I typically would go out like a 30 delta or on the call side, I go even farther to like 16 delta. But in those cases, those are where you're going to try to put a play on with buffer in anticipation that you're going to stay within those range and not break out.
Yeah.
For me.
Yeah, I agree. And the one thing I'll say on the put side, because I don't like to talk about selling naked calls, is if we get down here pushed up against 101 again, first of all, yes, everything I just said, you don't want to keep touching this 101. However, in this case, it wouldn't be the end of the world because of this action preceding it where we're putting in these higher highs. So that's giving some strength, giving some guidance that if we get back down to 101 again, it's not the worst thing in the world on this current move that we're in. Then, like you said, in this 101 to 105 range, depending on how the math works out, you sell that 30 put. Maybe you get super safe, and volatility is extreme right now, like we just saw. So maybe a 20 delta. Maybe you can get some more risk mitigation. Basically, we see this $86 here, and that's an important level again because that's where the all-time high started from. That's where the swing started. So if we're in this 101 to 105 range, and you can risk mitigate to potentially below 86 and still pocket a good premium, that's kind of the sweet spot. It feels weird. It feels weird. Like a year ago, I would have been like, yeah, I'm all in on that. And now just conditions of the market, I'm like, man, is that even good? Like, but that is the theory behind it. And the last thing I'll say real quick to sum up kind of what I was, trying to get at with the swings and the lows and the all-time highs, it can be really confusing. The candles, make it a little harder to see because there's so much candle noise. And that's why we say 1 day, 4 hours. This chop here of these candles can really throw you off. So I don't know, maybe it's helpful just to look at a line chart of it every now and then. When you're looking at those swings, when you're looking at, like, you want to smoothen the chart out as much as possible to see the movement and, start to see how this movement is all connected. Like that yellow line I just drew is a lot more, all hindsight, but it's a lot easier to interpret than worrying about all those little chops in between. And so that's kind of my closing thought on this level of price action, this, introduction basics, is it's all about when you have that aha moment where you can actually see through the chop of these candles and what's important, and then just start building from there, and going through the lesson over and over and over again, because eventually I don't know, that's what my experience is. Just I feel like I'm not getting it, and then all of a sudden one thing that somebody says and it was like, oh, that click. So it's an art, to say the least, but it's not, you don't have to be an artist. You don't have to have this, artist brain. It's just the kind of thing that you just keep trying, and eventually it's going to click. When you see it, you see it. And I'm hardly saying that I have it mastered. I still will see things or not see things that other people call out, that I'm still learning and growing. But there is a clear maturation at play that I can start to see, which is encouraging, and then that kind of helps keep you going.
Yeah, no, I give a shout out right here to our Discord. I know we're shilling it this episode a little bit, but I'll tell you, the thing that's really helping me is we got a guy in there that constantly posts a handful of charts every day with little helper level arrows that kind of tick, and it's just constant repetition of seeing that. Then we got a couple other users in there that'll ask questions about them and things like that. And it's really kind of helping me grasp some of this because I don't know. It's one of those things where people pull it up on the chart and like, yeah, of course that looks, yeah, that makes sense to me. And then you actually go try to do it in practice and you start staring at it and you're like, all you see are lines and you're like, whoa, wait a minute. Is this the high? Is this the low? Is this the level? Is this a level? Yep. And then you kind of just second guess yourself all the time. And so I would just further that constant repetition and exposure to that, and maybe someday I'll get it.
Yeah, and I would even say the guy that posts all those charts, like, I mean, even though we clearly see his skill as further along than ours, I mean, he's posting that because that's his practice. Like, he's not posting it to be like, hey, I called it, look at that. Like, I mean, it's that's his repetition is, here's a chart, here's what I see. Sometimes he takes a play, sometimes it's not even taking a play. It's just literally it's hitting the gym. It's hitting the exercise. It's, doing the thing over and over again, and, looking for conversation, like, asking questions about it, challenging him on it, all that kind of stuff. It's all a learning process.
Well, that brings us to the end of this episode. I really hope you kind of learned something here. I know we touch on a lot of these charting episodes, and it's kind of tough because there's not always a lot of practical application to it. I tried to give a little more practical application in this episode, made it tied into an actual real play and where that's sitting. So hopefully you guys found value in that. If there's anything else you guys want to see, leave a comment below, hop in our Discord, let us know. Love to cover it, love to expand our own knowledge about whatever that topic is. Otherwise, I hope you guys have a great week out there. The volatility is sure to continue at least until the next Fed meeting that everybody's getting antsy. More earnings are coming out. We're in the thick of earnings season. It's only going to get more and more earnings announcements to see how well is the economy holding up. Where is it going? All kinds of speculation will be rampant. You can expect a lot of price action moves, a lot of volatility. So good luck out there if you happen to be trading it or riding it out. Otherwise, remember, think outside the block.